The relationship we all share as traders is that we cannot outgrow technical analysis. Okay, even if you are into news trading, you equally need to understand what technical analysis are. Okay, and even if you are a pro or an advanced trader, you cannot outgrow technical analysis. That way, you can be able to understand what the market is doing, and understanding what the market is doing is what gives you an edge. Okay, so in this video I'm going to be showing you how to do technical analysis. Okay, so let's jump right in. Now the first thing you need to understand is the market does two things. It is either bullish or it is either bearish. Bullish simply means it is either moving upward, giving us higher high and higher lows, or it is bearish, giving us lower highs and lower lows. Now whichever way the market is moving, you need to be able to stick with it and trade off of that direction. Now one of the things that can actually harm you as a beginner is when you are looking for opportunities to sell when the market is actually bullish, or looking for opportunities to buy when the market is actually bearish. It is always advantageous to stay with the trend. Having heard of the saying that the trend is your friend. Okay, the smart money guys traders know how to take out beginners traders, because why? They understand that beginners are not actually patient to stay with what the trend. So let's jump right in to understand what the market is doing. Now this market was actually bullish, okay, but from here we had a shift. So the shift started from this zone here, from here. Started from here. Okay. Now, if you notice very well, you notice that the market was what? Bullish before, but the shift started from here. So what did we see here? There was a break of structure. Now, whenever we see a break of structure, it simply means that the market, it's about what? Reversing or continuing its trend. Now this market has already actually broken structure, and this shows that this market is going to be what? Turning out what? Bearish. Now what we do is we outline this order block that led to the break of structure. It is a very important order block. Okay, now somebody was asking the question, what is order block? It's actually a zone where we expect sellers or pending orders are resting, okay, to mitigate positions and also rise price to the downside. Now one of the takeaway you need to be aware of is when the market wants to reverse, it gives a signal, and one of the signals is actually liquidity pool, okay, telling you that this place is going to be a zone for the next target, because these guys are buying and the market has turned bearish. So the market is actually what's going to be running them out from the trade. So this is our first target here. So we had to move to the downside. Now another takeaway you need to be aware of is whenever price wants to reverse, it actually leaves an incomplete what? Incomplete price. How would I put it now? So let me put it like this. Having heard of the word chart patterns, something like this: left side of the shoulder, the head, and a break of structure here, and then we have the second head before the drop. Now take note of this. This is called head and shoulder pattern. This is the left side, this is the head, and this is the right side of the shoulder. Now let me show you what happened here. Price actually gave the left side of the shoulder. Actually gave us the left side of the shoulder. It gave us the head, but something was missing. This was the right side of the shoulder. Now the left and other block here, this was the other block that led to this break of structure here. Don't forget what I said. So price is going to be coming back to this zone. Now one of the mistakes traders make is whenever they see price come here, they want to jump in. There is not the right time to jump in, okay? You're going to be stopped out. You are still in the move, okay? You're still coming back here. It's not as if they forgot. It's not as if they forgot. This course might be a little bit advanced for beginners traders, but just stick with me, okay? It's not as if they forgot. They're going to be coming back for it. Let's move closely and see what happened. See, they actually came back for it, gave us the right side of the shoulder before dropping back to the downside. Okay, now let me show you an example of this concept again in my setup that I have in 15 minutes. There's something that I used to do. Now whenever the market, I miss the move on the 4 hours, I go down to the 1 hour to look for an opportunity. Now this opportunity happened here in the 1 hour. Okay, let's see it happen here. Okay, is it here? The same concept. Okay guys, the same concept. This is the last order block. This is the last order block. Okay, the market is bearish as we are informed, so we had a break of structure here. This break of structure simplifies that price is going to be coming back to this what order block here before what reversing to the downside. Now don't forget what price I used to tell you. This time around they did it here. It seems as if price is going to be reversing here, but it didn't. It's still going to be coming back up the block here. Okay, see what it did. It came back to the order block, gave an entry trigger. Now what's the name of this entry trigger? This is our dark cloud cover. It covered over 50% of the order block. Now dark cloud cover simply means a bullish candle being formed and a bearish candle also being formed, but the bearish candle did not cover the bullish candle. It covered only 50% of the candle. Okay, it covered only 50% of the candle. That was what happened here, and it's an entry trigger. Okay, before price took the move to the downside. Okay, now let me show you what I have as a setup. Now don't forget, I've outlined from the 4 hours. Now this is 1 hour. I have my opportunity here to trade. Now the next opportunity that I'll be having is in the 15 minutes. Now I keep outlining it down to the lower time frame. Now what do we see here in the 15 minutes? Now remember the head shoulder pattern that I talked about. So this is the left side of the left side of the shoulder rather. This is the head of the shoulder, and now I'm waiting for the right side of the shoulder to be formed. I'm expecting price. You can take this trade with me. Okay, now our entry will be here. The price will be 1.363103, and the stop loss will be here. The stop loss will be here above this word high. Now I'll show you the reason. The same concept. This is it here. What can we see here? Now how do I know that this is the zone where market will reverse? I told you about something, that when the price is coming close to, if the market knows they're going to be coming back to that other block, they will leave a static liquidity, okay, there. And as you can see here, the market is creating a liquidity pool. So many folks are buying here. Okay, so many folks are buying here. So let's go back to the 1 minute to confirm what I'm saying. So we'll keep outlining this thing. We'll move from 4 hours, we move down to 1 hour, we went to 15 minutes, we went to 5 minutes, and now I want to confirm this. Now I always use 1 minute as my how would I put it, check alarm, whatever I call it. I always use it as my stuff that keep reminding me what the market is doing. I think this is not the zone. It always serve as my reminder. Okay, now this is why I said I was going to be entering. This is where my stop loss will be. My stop loss will be at 1.63221. Now remember what I said, the static liquidity is here. This zone here is going to be taken. Okay, for the 1 minute price might get here, but I don't know. I'm using my analysis on the what, on the 5-15 minutes, and don't look very well. You see a break of structure here, which shows that this is a valid zone for us to what, take this trade. This is just an opportunity for you. I drop setups like this in our community. Okay, I'm going to be leaving the link in the comment section. Okay, in the comment section you can gain access to it. Okay, you can join our community or drop setups and you can trade.